Good morning, everyone. Welcome to our morning show on the trading podcast, where we are going to see some of the biggest names, especially after yesterday big pullback into the market, and giving a follow up on the action that I shared with you on Wednesday. If you remember Wednesday, the biggest name of my video was, "Are the bulls, tech bulls, getting tired?" It was the first signal. Yesterday, the name of the show was, of the episode, was risk management, and gave lots of tips and how to manage your risk, and also looking for volatility names. So right now, what is the theme for the day? Now what? What are we going to do? So let's make first, before jumping into anything else, let's look and give an overall picture, or when and where we stand on some of the names that I gave you yesterday. I've been giving for the last couple of sessions, and trying to make a follow-up on these kinds of movers. So let's start with the first one. It was actually the biggest name yesterday, Apple. So more than 8% down move. And yesterday I gave things very, very clear. One of those things that I've been highlighting on our show, Eyes on the FANG, okay, the show that we have, that I have at live.sotoptions.com. Every single day I go into the FANG names. It's a show specifically for the FANG names, and I go into detail in every single name from the FANG. So Facebook, Apple, Amazon, Google, Netflix, Microsoft. I go into every single name and make an in-depth analysis. And one of the cases that I've been highlighting is a bearish divergence on the oscillator, with the oscillator pointing down and while price was going up. So that's called the bearish divergence. That's a yellow flag. It means that, okay, we need to be careful, because we can have here a pullback forming, and that's one of the signals. After that, it was yesterday that it broke below my support line, 127. What is that level? It was the 8-day moving average, it was also the Wednesday low, and 127 was the trigger. So yesterday, and one of those things that I said yesterday is below 127, expecting a $7 drop all the way into 21-day moving average. And where did we stop? We stopped at low 120.5, exactly at the 21-day moving average. Now what? Now you trim profits. Okay, on the moves down, you trim profits. We had 2 days pullback. Can it go for day 3? Yes, of course. Anything can happen. Okay, on the market, anything can happen, especially after such a parabolic move that we have been seeing on the last couple of sessions on April. But the 21-day moving average has been holding all the bull case scenario, and we have been seeing that a move into 21-day moving average has been an opportunity to buy. Honestly, I'm not looking to get into any position, especially when we are going to a 3-day weekend. On Monday the markets are closed, so I'm not risking any bet here. But if I was short, I would be already locked my profits and out of the trade. Now, if Apple breaks below 120 right now on the pre-market, let's see where it stands. It's exactly at 120. If Apple breaks below 120, we have a gap to fill here at 118, and things can get very nasty, because the 50-day moving average is at 106. We have gaps to fill here, so it can get very, very nasty, and it will be a trend change. Okay, but we need to see it. Needs below 120. No market correction, no Apple correction will start while we are above 120. So needs to break below 120, and then we will start the next leg on the correction. But we need to see it. Right now, only a 2 days pullback, can be a gift here. Let's see. I prefer to wait, see how the action will go today. Is it going to hold 121.18 to fill this gap and reverse back up? My bull case scenario only above 127. Okay, why? Once a support is broken, it becomes a resistance. So if it bounces, I'm expecting that somewhere around 127, 128, it fades. And from there we will reevaluate if it makes a higher low and resume back up, or if it starts making lower highs, lower lows. So it's very premature to have a conclusion here. But for now, holding where it should. We had a pullback in the 21-day moving average. That was the game plan. Now you go cash, go into the long weekend and wait for the next one. AMD is exactly the same, worked very, very well this week, gave the trigger for the longs at $88, said that it would go above $90. It gave $6 here upside this week, and for those that manage the risk the way I've been saying, trim 1/3 of the position after the market opened, raise the stops on the rest from $88. You already probably got stop on Wednesday on this first day pullback, and one of those things yesterday I also said that one possible target would be around $82 near the 21-day moving average and near my support line, and we landed perfectly there. Now what? Now you should have trimmed profits yesterday. And honestly, for my own risk management, I usually stay cash overnight. So probably staying cash overnight. Now what? Now needs below, for the bear case, needs below $81. Where it stands this morning. Let's see. It's at $81. Exactly like that. So needs below 81, breaks below 81, it can fall apart, it can go all the way into below 76, and from there it can roll over and go into this gap filling here, the 50-day moving average around 70.9. Yes, it can go, but we need to see it. We didn't see that yet, okay? And no one can predict the future. Can it happen? Yes, of course it can, but it could also, on this pullback, it could fall apart, and it didn't, okay? We wait for price confirmation. The easy part of the trade is gone. It was yesterday, it was the pullback. Now it's time, in my opinion, to wait and see where the market is going next. Bank of America financials, middle of nowhere, no real action here, and staying out. The airlines looking for Boeing, exactly the same thing, keeps playing the range. 181 yesterday, 181 was the resistance. It $180.85 and faded. The support is at 167, gone all the way into 168. So basically no real, no man land. Keeps here some consolidation before triggering the next move. Longs only above 181, shorts below 167. So I try to keep things very, very simple. Beyond Meat gave a very beautiful scalp yesterday. Some of the traders played the scalp, but with the rest of the market fading, it's always the same that I usually keep saying. You look for the rest of the market, and you need the market to move all together. You are seeing SP 500, you are seeing Nasdaq, you are seeing Dow Jones, you are seeing small caps. Every single name was going down. That's not a rotation. Okay, when we have rotations, we have leaders. We have, okay, if we are going to a rotation out of the tech and the money is moving into the financials, that's something completely different, because we will see financials having 3-4% of moves with the tech names going down. It was not the case. So yesterday we had a big shake and also on big volume, and on the moves up you trim profits. That's exactly here what should have happened yesterday. Beautiful scalp above 139, but once it breaks below, once again it was a scalp. The stock opened at 133. It gone all the way into $142. So $9 here, $9 scalp here on the stock. It was a beautiful one. But once it breaks back below 139, 139 was the resistance. Goes above, breaks below, it's bearish. okay, and stays below, it's bearish, especially with the market falling apart. So once it breaks back below 139, it's a short. And yesterday it gone all the way into 128. So you had $9 upside, you had $10 downside. That's the way here to scalp this thing. So basically, yesterday it gave $19, $9 up, $10 down. Now what? After such a strong bearish candle, I believe that the easy part of the trade here is already gone. The yesterday candle was actually very, very bearish, but we need continuation. The stock right now, 132. We need below 128, okay? See, it's actually also very funny that the levels that I give are there for a reason. See, the level that I've been giving you as support 128.70, 128.70. What was the low yesterday? 128.71. Basically, I missed the damn sport by 1 cent. So it's simple, okay? And the levels are there, and I put levels there for a reason, because they work. So when you hit the support, you trim profits. So it keeps the same. Goes above 139, you can add longs, go back below, you can add shorts. So because it's a failed breakout, so it gave $10 downside. Simple. Okay. Now what? Now we wait. Breaks below 128.7, my support. Fill the gap at 126, and from there it goes into 121. It can have below 128. It can have $7 drop here very, very fast. So, but we need to see it once again. Facebook, exactly the same, lost the momentum yesterday. I highlighted that I was seeing a bearish divergence versus the price going up, the oscillator going down. It was a bearish divergence. Now we wait. It didn't fill the gap at that is still open, and we need to see if it's going to fill this gap at 2083 or not. We have the 21-day moving average at 277. Not looking to buy any dip here, waiting. Prefer to wait in next couple of sessions. Pins also gave a very nice, beautiful trade this week. I gave you the targets. 38, 39 was the target, and it worked very, very well to trim the profits. Now you wait. The stock is pulling back, the market is pulling back. Bear case scenario is below 34, can fall apart below 34. Otherwise, it can reverse from 34 and resume back up. Wait. Cash is also a position. The easy part of the trades, in my opinion, already gone. Looking for the cubes. The cubes is exactly the same thing. After such a strong move, okay, we have a pullback, strong move, pullback, strong move, pullback. Yesterday, no different, strong move, pullback. And where did we stop? We stopped right where we should, 21-day moving average, as we have been seeing in the past. Now what? Now we wait. 283, it's my support line. Breaks below 283 and stays below, it can go all the way into 268, 269. That's the 50-day moving average. And there, we will have a trend change. Why? Because every single pullback stopped around 21-day moving average. If we go and stay below 21-day moving average, we will have a trend change, and we can start a bigger correction ahead. But we need to see it. Something that we are not still seeing it. Looking for the pre-market, 287. Okay, 287 needs below 283. And below 283, then I believe we can have another more than $10 drop here, $10 to $15 drop on the cubes. But we need to see. Yesterday was on big volume. The oscillator was overbought, so it favored a pullback. But yesterday, 5% downside, at least you trim your profits. And wait. Cash is also a position, in my opinion. Another day that I gave this week, Revolve, didn't trigger yet, needs above 22.1. Keeping on watch. If it grows and stays above 22.1, can go up. If it goes below $20, it can give a nice short. So keep it on your watch. Snap also this week gave nice cash flow. Yesterday it showed some relative strength with the market falling apart. It was actually able to recover, but needs above 23.6. The next leg for the bull case needs above 23.6. If it breaks below $22, it will fall apart and go back into the 20s. So that's the action that I'm looking here on the the market. SPY, exactly the same thing, pull back with the rest of the market. Where did it stop? It stopped right at the 21-day moving average, 342. Now what? Now you wait. You see, is it going to fade and break below the 21-day moving average? Every single last couple of pullbacks stopped since July stopped at 21-day moving average. If it breaks below 342, we can start the next leg of the correction. And from there, we have lots of gaps to fill. And the next logical level, it will be around $330. So below 342, we can have $10 to $12 drop on SPYs. But we need to see it, okay? Not looking to buy the dip, also not, actually, I'm keeping the cash is a position going into a 3-day weekend, and that's precisely what I'll be looking. Yesterday, one of those things that I've shared, for those that didn't have the chance, please go back and review yesterday video, very important on the risk management, and one of the things that I said is keep your watch on VXX, UVXY, TZA. So let's look into some of those names. VXX, yesterday, boom, big move up, 30% move. So basically, it opened at 28.3, gone for more than $4. So beautiful move, 30% move yesterday on the stock. You generate cash flow. Okay, that's one. Let's go for another one, UVXY. UVXY yesterday, 20% stock move. You generate cash flow. Open at 24, gone for a high at $30. So basically $6 move here on the stock. Now what? Now you trim profits. Okay. For example, if you are playing with a stock, for the stock you need to play with some more money. Okay, and not the same thing as options. So. And 20% move intraday, it's very, very big, okay? It's insane, okay? It's great for, you generate cash flow that way. And those were the things. I gave you another one, TZA. Okay, and said look for TZA. 8% stock move. But one of those things that I've been keep saying is that with these, you generate cash flow intraday. Is to generate when the market's starting to pull back, volatility usually pick up. But the trend here, it's down. Okay, the biggest trend here, it's down, and but that does not mean that we cannot generate cash flow. 30% on VXX. 20% on UVXY. Okay, so those are big names that you can use to generate cash flow when the market starts falling apart. And please go review yesterday's video. I explained how to sell and how to keep going with the momentum. We had lots of momentum on Apple, for example, and many other names. You go with the momentum, trim 1/3 of the position after the market open, raise the stops on the rest. Did your stops got hit yesterday? Yes, but you kept because you came in from the early in the week, lower levels, and you were able to keep the profits. You cannot, and no single trader can short the top and buy the dip. It's a myth, okay? It's false statements. Those that say that shorted the exactly high and bought the exactly dip, because that only happens after some the lows and the highs only after a couple of sessions are confirmed, okay? And no one can really predict what the hell is going to happen next week, especially after a 3-day weekend. So now what? Now looking overall picture, we had the pullback yesterday. Now we want to see if yesterday's lows are going to hold or not. If it breaks below yesterday's lows, I gave you the trading plan. We can go into the next leg down into the market with more selling pressure. You look for keeping the ball, okay? You look for you have another one that I have here on the watch list. You have triple cubes, okay, the heavy short on the cubes that yesterday also saw very big volume and made 15% stock move. So you have that also for as edge. You look for edges if the market continues to roll over, but needs to break below yesterday lows and stay below that. Otherwise, if you are going to see what we have been seeing to the past, and maybe going into the weekend, the safest in my opinion is staying on cash. But that's my own way to manage my risk. Okay, so once again, thanks for watching. If you like this kind of videos, please give a like and leave your comments on the video below. Thanks for watching. Don't miss the next episode, and stay safe going into 3-day weekend. Enjoy your 3-day long weekend. Markets closed on Monday, so enjoy this 3-day long weekend, and see you all on the next episode on Tuesday. Okay, thanks everyone for watching. Bye bye, and be happy trading. Bye bye everyone.